Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, October the 17th. The year's 2019. Let's talk trading. Abilities versus choices. Now, for those of you who have been following me for some time or who know me, spoken with me, probably know I like to say life is choices because that's what it gets down to. Life is choices. Okay, what does this have to do with trading? Well, each of us has certain abilities as a trader, but one poor choice could wipe out days, weeks, months, years of profit, everything. One poor choice. So when you look at abilities and you compare it with choices, you could have all the ability in the world, but if you make poor choices, you're not going anywhere. I mean, that's true in life, not just trading. You can see lots of talented people, musicians, people in sports, people in the arts, but they make some really poor choices, and all that ability is just, gone. It's like the old saying, yeah, he could have been a contender, right? But because of the poor choices, he's no longer a contender. He's a never was, or she's a never was, or never will be. All gets down to choices. So in trading, there's lots of choices. And you know what the most important choice is, don't you? I know you all do. It's the choice of whether or not you employ your risk management and your money management. If you don't stick by this one simple phrase, that risk is the dollar or percent of your account that you're willing to lose per trade on any given trade, if you don't stick by that, that's one of those poor choices because sooner or later it's going to bite you. It's that simple. Now, of course, moving forward, boys and girls, fellow traders, your results are going to probably differ from mine because of the choices that you make. And you all know these videos are for educational purposes only, right? Not to mention that if you get involved in trading, it's very risky and then you could lose all your money. And so that's why many people advise you that if you want to choose trading, investing, risking your money, that you should make the choice to seek out your advice from an accredited financial investor or professional. That way, when they lose your money, you made the choice that, hey, I made a good choice to, listen to and take advice from an accredited financial professional rather than some guy you hear on YouTube or read about on some trading forum on the internet, right? Okay, and on the thing with choices, you can choose what method to use. In fact, I got something in the mail talking about MACD. It's like, oh, MACD. It's like, give me a freaking break. You know, most people don't even know what MACD stands for, the moving average convergence divergence. They don't know what convergence is. They don't know what divergence is. They don't even know how it's calculated. So it's like it's pointless. It's a poor choice, my opinion. You don't need it. What more? A few horizontal lines and your eyes. What more do you need? What's this? This is a low on this time period. You can take it out to D1 if you want. Okay, you can see here, hey, price is high. Look where it reversed here. Look where it kind of reversed there. Look where you can see this. You don't need some MACD or other squiggly line indicator to tell you about it. It's ridiculous. I mean, you can go all the way up to the month and you can say, oh, well, look, on a month, if I look at the monthly, you can see here how price has, at this level, has been pushed up. How many times? You don't need that other nonsense. I don't even know why they keep trying to push it on you. I really don't. Whoops. Let's get back here. Okay. So let's look at the week. Okay. The dollar yen has settled back into the upper wick zone of the previous week's candle. You can see 40 pips off the high this week, 50 pips off the low. We've got only one gap that hasn't filled. I hope some of you traders took advantage of the gap. And I know there was that one trader that said something about the spread. It's not really practical. But you know, that's the choice you make. But I know this works week after week for profit. Now, granted, it might only be 5 pips here, 10 pips there, but guess what? They add up. And for the year, 111 pips from that daily, from the yearly open there. And now remember, yesterday, right here, we were inside the range of the first day of the year, right? First trading day of the year. And you see here we tried to go up, but then we fell down. And right now, if you're taking that trade, you're 17 pips to the good. But look, we're getting into the first day of the week's range right here and the first day of the month. And you can see how price has been rejected off of those levels. I mean, this is simple stuff. You don't need some squiggly line indicator to tell you this. You could have a couple horizontal lines, or hey, you know, you could just write down on a piece of paper what these levels are and look at price in comparison. The lines to me just make it a little bit easier. But we're not talking about higher math. We're just talking about plotting lines at the high and the low of the first day of the week, the month, and the year. I mean, it's not that difficult. It really isn't. And here we're just looking at the opens. You can see how price crossed below February open, then the August open, heading back down to the June open. Once again, simple lines. Whether or not you employ them, that's your choice. And then the same thing with all the ranges for the last 12 months. Once again, simple lines, your choice. And the inside bar. Well, look what happened here. We had an inside bar yesterday. We broke to the high, and now we broke to the low, got to the high of the inside bar on the month that happened 1 month ago, and reversed up through it. And right now you're 5 pips to the good. And here's all those inside bars. Remember, the blue are the current ones, and the gray means that price is within those inside bars. And if you wonder why I have these signs like that, because that shows inside. So for outside bar, it's the opposite. So it shows prices went outside. Okay, daily range. Look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 over 100. We've got 1 over 300 and 1, 2, 3, 4, 5, 6 over 200. So once again, looks like it's the pound pairs and the euro pairs here leading the charge. And the holo right here, you see daily H1 highest open. There was opportunity to get short a couple of times. You see price went here, crossed over the monthly H1 highest open, crossed below. Could have taken advantage there, 108.86 or 0.84, 0.83, taking or actually even stacking on. And you see how prices dropped about 30 pips or so since then. Buy zone. The pivot was right near the open, so no real bias. You just trade what you see here. And you can see right here, you had a trigger right there, but price reversed. You had a trigger right there, price reversed. So if you were trading that session, you probably either scratched or took a hit on the stop. Here, if you went long, you should have profited no less than here, right there. Price came up, crossed back below the previous high. You can see here, once again, price failed to make a high, scratch trade or a couple pip profit. Here on the low, price dipped down right here, should have exited there. Second opportunity right here, should have exited here. And people want to call that hindsight, but no, we do this every day. You know what to do in advance. It's not hindsight. We're just showing you what happened. Green rats, time for you. And we've got 48 pip range, not much, but it's still tradable. And as you can see, we're popping off of that daily low, 8 pips at the moment. And once again, we took out that pivot point. Here's that weekly pivot that we're looking for. And we're still, I don't know, what, 80 some pips away. It could happen between today and tomorrow. We'll just have to wait and see. Or we might have a missed pivot for the week and it'll get hit next week. Or maybe the week after, or maybe not at all. And you can see here, once again, pivot taken out. We've got a missed pivot here from 4 days ago. Price action. 3 ball, right at the line, pro trade. 3 ball, crossing the line, pro trade. And you can see that's about 40 pips right there. Price doesn't like staying between the lines, just doesn't. In and out of the wick zone, both upper and lower. And once again, those horizontal lines from the previous day, week, month, the open, the high, and the low. At the tick level, not much happening. Einstein line, once again, it's not very active. Traders in New York are probably heading out for early lunch. And you can see the wick zones from all the different time periods using daily, weekly, monthly on using the HL5 indicator. You can see here it got in that area and everything just kind of slowed down to a crawl. And looking at the ATR ranges, here was the open. You see price hit the daily open plus ATR 2 times 0.5, which is half of that ATR right there, and then reversed. So a nice place to take profit. And now you can see it hit the daily open minus half of the ATR 2. And it's starting, actually exceeded it. And now it's starting to reverse. So you see from ATR, half of the ATR, the minute ATR right here, to the min ATR right there. Open plus half, open minus half. We had it hit both. You can use those in trading, once again, looking for places to exit. If you're trading away from the open, and look for it to reverse if you're trading towards the open. Some people like to trade away. Some people like to trade towards. And you can see once again, we're going right back to that first day of the week opening range right here. It's really not hard. I really don't think it's that difficult. Just have to use some common sense. You just have to make good choices. Now, the thing is, you can't use hindsight when you make a choice. If you enter something and you lose, that wasn't a bad choice. So long as you used your abilities to the best possible. In other words, you executed your stop loss properly, you did your entry on time, because you just don't know what's going to happen next. And just remember, it's not what you trade, it's how you trade it. So go out there, drain the banks, hit subscribe, and hit like.